Recently, we've heard that China has bought gold for the 17th straight month, and that they actually increased the size quite a bit in the last month they reported. And that's not to talk about the speculation that they have a lot more gold. One thing the U.S. could do, though, that could help the U.S. and kind of hurt the countries that are getting away from the dollar and treasuries into gold and into using yuan as a payment currency or trade currency, is revalue gold up massively, right? Then it becomes more expensive for these countries to buy their gold, but you can bet they would also accelerate their purchases of gold by selling treasury.
The current financial landscape is increasingly defined by growing debt burdens, weakening currencies, and a fragile dependence on continued monetary intervention. While markets appear stable on the surface, underlying imbalances continue to build, creating conditions that could drive a significant revaluation in real assets. Innecco, a macro-focused market analyst, outlines that the real story is not short-term price movement, but the long-term erosion of purchasing power. He highlights that governments are trapped in a cycle where debt must keep expanding to sustain economic activity, leaving central banks with limited options beyond continued monetary easing. In this environment, gold is not simply an investment. It becomes a reference point for currency stability. The recent price action, while volatile, reflects a system under pressure rather than a market losing direction. According to this view, temporary pullbacks should be understood within the broader context of a long-term shift in the monetary system. Now, we present the clips from marioinnecco's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The major reserve currency in a fiat world will always indebt itself. And why is that? Well, because it becomes really easy to buy things abroad because you have the major reserve currency. People always demand your currency. So you kind of hollow out your economy like the Portuguese Empire, the Spanish Empire did. They hollowed out their economies because they had so much power. They neglected their own economies because they could get anything they wanted because they had the major reserve currency. And so that's why I think what's happening to the dollar, the fact that it's waning massively, especially versus gold as a major reserve asset. And there's this article here I found from cointribune.com. It says China lowers U.S. bond holdings to historic levels, right? As you can see here, China shifts from U.S. treasuries to gold, and it's been a big shift since around just before 2010, from 29% of all treasuries held by foreigners, I think, I'm not sure what this is, to 7.3%. And look at the gold, and recently we've heard that China has bought gold for the 17th straight month, and that they actually increased the size quite a bit in the last month they reported. And that's not to talk about the speculation that they have a lot more gold. And the other thing China has is the rare earth card. And I was looking at some data. The U.S. imports 80% of its rare earth consumption annually. So they only produce 20%. And out of those 80% that they import, around 75% comes from China. And we saw last year that China did use that rare earths card, so they could use that again. One thing the U.S. could do, though, that could help the U.S. and kind of hurt the countries that are getting away from the dollar and treasuries into gold and into using yuan as a payment currency or trade currency, is revalue gold up massively, right? Then it becomes more expensive for these countries to buy their gold, but you can bet they would also accelerate their purchases of gold by selling treasuries. And from what I hear from a very good source, that has very good sources in the Gulf region. Those countries, which include Saudi Arabia, UAE, Qatar, Bahrain, Kuwait, they're continuing to sell treasuries in pretty good size, and they're actually buying a lot of gold. They're buying silver as well. They're buying equity in gold and silver miners as well.
The deeper implication is that markets may be approaching a phase where confidence in fiat currencies weakens more visibly. When that transition begins, it tends to accelerate as investors seek alternatives that preserve value. Gold and silver, in this context, act as monetary assets rather than commodities. The argument being presented is that central banks may ultimately have to allow higher inflation or pursue policies that indirectly reprice gold to stabilize balance sheets. This creates a scenario where traditional valuation models become less relevant and price discovery shifts toward a new equilibrium. The consolidation seen in precious metals could therefore represent a pause before a structural move higher. Once momentum aligns with macro pressures, the repricing could be rapid. Silver, given its smaller market size, could respond even more aggressively if investment demand returns alongside industrial demand. Let's get back to the interview.
Trump said he would stop Iran's ships, but 90% of those ships are heading to China. Trump made a statement today: "We will stop every ship paying tribute to Iran in international waters." That was Trump's quote. Everyone saw this as a move against Iran. I asked the question, where are those ships going? Well, 80 to 90% of Iran's oil is sold to China. Almost all the ships he plans to stop are heading to China. Trump says Iran, but in reality, he's cutting off China's oil pipeline. No one's talking about this. Well, we are now, right? Let's first look at what happened in Islamabad. Well, that's where they were trying to negotiate some kind of ceasefire, or I don't think it was the peace for the war. It was just a step towards it. It says, with Pakistan's mediation, the U.S. and Iran sat down at the table. Vance led the U.S. delegation. They talked for hours. No deal was reached. J.D. Vance said, and I quote, "We gave our final and best offer and walked away from the table." Hours later, Trump made two statements. Both were very heavy. Here's the first one. The U.S. Navy will blockade all ships entering or exiting the Strait of Hormuz. We are imposing a full blockade. We will not allow Iran to sell oil to the people it likes and not to those it doesn't. It will be all or nothing. Now here's the second statement by President Trump. Let China send its ships to us. Send them to Venezuela. We have plenty of oil. We will even sell it cheaper. Back to the analysis by Penguin X. When you put these two statements side by side, the picture becomes clear. With the first, he's cutting off China's oil pipeline. With the second, he's telling China, buy from me. So why would China buy from the U.S.? Right now, China is buying oil from Iran with its own currency. There you go, own currency. With yuan. No dollars, no SWIFT. No dependence on any system controlled by the U.S. What happens if it buys from the U.S.? Well, it would have to use dollars. It would enter the U.S. banking system, conduct transactions via SWIFT. The U.S. could turn off the tap whenever it wants, impose sanctions, freeze accounts. Well, I just talked about that, didn't I? And we've been warning about this for years. And by we, I mean me and some and others in the alternative precious metals space. Just like it did to Iran, just like it did to Russia. Trump doesn't want to sell oil. He wants to make China dependent on him. China knows this. It's not about oil, it's about control. Now let's look at what Iran has set up in the Strait of Hormuz. Iran has established a toll system in the strait. It assigns priority scores from 1 to 5 to every country. First priority, friendly countries, passage is facilitated. Other countries go through security screening. It's verified that they have no ties to Israel or the US. Then the fee is paid. Fee is $1 per barrel in yuan or crypto. And you might ask, what about gold? Well, gold is very easy to get once you have the yuan. That's why they have the Shanghai Gold Exchange. You can exchange the yuan for gold very easily. And the yuan payment system is already set up. It's very easy. So let's continue. Once payment is made, the Iranian Revolutionary Guards issue a passage code. When the ship approaches the strait, it transmits the code via radio. A patrol boat meets. It escorts the ship until it passes through the strait. The system was legalized by the Iranian parliament in March 2026. Well, I heard Trump saying that it's illegal, but I would also say that bombing Iran is illegal. And even Japan used this system. Well, there you go. That's huge. Japan. One of the biggest U.S. Treasury holders, right? Japan, I think, has got about $1 trillion in U.S. Treasuries. One of the U.S.'s closest allies as well. It paid Iranian yuan to ensure its ships could pass. Now, let's get to the critical question. Can the U.S. really stop a Chinese ship? What does it mean to stop and search a Chinese merchant ship in international waters? China would see this as a trade blockade, as a violation of sovereignty. It won't stay silent. China's likely response, it would increase support for Iran, strengthen the yen system in the Strait of Hormuz. It could move its navy closer to the region, accelerate sales of U.S. bonds, treasuries. And that's not good. That would mean higher yields, right? And the higher yields would dampen even more consumer spending in the U.S. It would probably be the last nail in the coffin of the economy in terms of growth for this year. We're already seeing that GDP was revised lower, the latest numbers. So he goes on to say, so if you stop a Chinese ship, you don't solve the problem, you make it bigger. What if it can't stop them? Then there's an even bigger problem. Trump said, we will stop all ships. Well, and he says the world is watching, right? Gulf countries are watching. Europe is watching. Taiwan is watching. Russia is watching. They all have one question in mind. Can America do what it says? Well, even I am watching because I'm interested to see if this works. We haven't heard about any ships being blockaded yet, but I'm sure we'll hear something soon. If Chinese ships keep passing, the US can't stop them, the answer becomes clear to everyone. It can't. Remember Ray Dalio's formula. When superpowers lose control of critical trade routes, trust collapses, allies drift away, money flees. That's how Portugal ended. That's how the Netherlands ended. That's how Britain ended in Suez in 1956. There are two scenarios, both are risky. First one, US stops Chinese ships, the blockade becomes real. This could turn into a crisis far more dangerous than a war with Iran because you're not facing Iran, you're facing China. The second one, the US can't touch Chinese ships. The blockade stays on paper, a perception forms. This country can't back up its words. Allies could distance themselves. The dollar could weaken. The first test is coming very soon when a Chinese oil tanker heads towards the Strait of Hormuz. What will the U.S. Navy do? The moment will determine everything. This is my personal analysis. The next few days will be very intense. I'll keep you updated on everything.
Looking ahead, the projections tied to this framework are substantial. If monetary pressures continue to build and confidence in fiat systems declines, gold could move towards significantly higher levels over time, with scenarios often pointing toward the $5,000 to $10,000 range as part of a broader revaluation process. These levels are not presented as immediate targets, but as outcomes tied to systemic adjustments in currency valuation. Silver, in such an environment, could see even more dramatic percentage gains. If gold leads the move and the gold-to-silver ratio compresses, silver could potentially rise into triple-digit territory, reflecting both monetary demand and tightening supply dynamics. The key factor is not a single catalyst, but the cumulative effect of ongoing fiscal and monetary pressures. This outlook reinforces the idea that precious metals are positioned not just as opportunistic trades, but as strategic assets in a shifting financial system. As conditions evolve, the transition from skepticism to participation could happen quickly. Share your thoughts in the comments below. If you found this analysis valuable, make sure to like, subscribe, and turn on notifications so you stay updated with our latest insights.